ARM Holdings stock is down about 7% after they've announced the recent quarter earnings. Currently, it's at $160. So, is it a buy at $160? That's what I'm going to cover in this video. In doing so, I'll cover their business model briefly, then I'll go over the financials, and finally, I'll do a valuation to show the upside. Let's quickly look at what ARM does. As you can see on the screen, ARM is involved in the licensing, marketing, research, and development of microprocessors, systems, intellectual property, GPUs, physical IP, and associated IPs, etc. So basically, they are a developer of technology or architecture, and companies will take that architecture and customize that to their needs. So basically, they make most of their money in licensing. That's why the margins will be very high. I'll show that when I show the financials. So let's look at the financials. As you can see on the screen, the market cap is $180 billion, and they make close to $3.54 billion for the past 12 months. So that's a price to sales of 50, which is ridiculously expensive. And the PE ratio at the moment is 270, which is very, very expensive. And when you look at their margin profile, look at the gross margins. Gross margin is in the order of 96%, which is unheard of. Again, this is majority a licensing company that sells IP, so this is expected. But the operating margin is quite less because their operating expenses are quite high at the moment. But as they scale higher and higher, they should get to profitability. Has strong balance sheet. They have close to $2.3 billion of cash and cash equivalents and almost no debt. Let's look at how they did in the most recent quarter. They grew their revenue by 19% year over year to make about $983 million. So there is royalty revenue, that's about $580 million, and the rest of the $403 million is from the license and other revenue. And they are diversifying their revenue. As you can see on the screen, currently the smartphone is about 40% of their total market, and they are increasing their footprint in the IoT, automotive, cloud, and consumer electronics, etc. So they're trying to diversify away from the mobile. Let's look at the guidance. They only gave near-term guidance, so only 1 quarter out. They are saying they can make close to 1.175 to $1.275 billion of revenue for the next quarter, and they will end the fiscal year with about $4 billion of revenue. So that's about 24% year over year growth. Let me now move on to the more interesting part, and that is the valuation. That will show the upside. And before I show the valuation, I want to clarify that this is not financial advice. I'm not qualified to give financial advice. I'm simply recommending my thoughts about ARM. It takes a lot of time and effort for me to make these videos. So if you find this content useful, please click the like button and also subscribe to my channel. Let's look at the valuation. In the reasonable assumptions case, in 2024, they made about $3.7 billion of revenue, the calendar year. I'm estimating growth rate of 20%, which is they'll make close to $9.2 billion of revenue by 2029. Since this company's gross margins are in the order of 95%, I think 40% net profit margin is apt. And I'm assigning a multiple of 50. For a company that's growing at 20% and 40% net profit margin, I can give like 35, 30 multiple, but I'm assigning 50 multiple because this company has a wide moat. So with that, this company will be worth about $184 billion market cap by 2029. And I'm assuming no buyback because they are giving out stock-based compensation and they're not profitable yet. But they have a little bit of cash, $2.3 billion of cash on their balance sheet. So I'm assuming no buyback, with which this company would be worth about $174 stock price by 2029. Currently, they're at 160, right? That's about 8% gain in 5 years. And this is after I assign a multiple of 50, which is a rich multiple. And in the great execution case, I'm assigning 25% growth rate for them to make about $11 billion of revenue. I'm assigning 50% net profit margin and a 60 multiple. In that case, the stock can double from the current price of $160. For my personal journey, I look at the reasonable assumptions case and I want a double. For me to get a double, this stock has to fall to about $90. So if the stock falls to $90 or below, I'm a buyer. Otherwise, I'm going to stay away from ARM. Let me know your thoughts in the comments. Thank you so much for watching.